Is this working? Hi, Ruth from Oxfam. I wrote down my question to try and avoid waffling, so I'm going to read it out. The current conversation seems to be measuring impact, asking what we did and not who we helped, and yet rising inequality means that there's a danger of those with the least having less, and the commitment of the SDGs was to leave no one behind. So the two questions are the effects reaching the most vulnerable, and are there any thoughts about using the metric of who the beneficiaries are, women, rural poor, refugees, rather than as an incidental, oh, we happen to help women?
And your colleague at Oxfam published a blog on how the SDG on inequality is the one that's being left behind, just yesterday. Yeah, and it's a pet topic of the WHO's reach is a pet topic, but we'll come back to that. Sheila, I dread your question. It's going to be far too difficult, but I'll pass it to someone else.
They're quite short and simple. Sheila Page, RDI. The first one is specifically to Luke. The second one is a generalization of it. When you're looking at subsidizing, if I may use the word, an investment in a small or conflict-ridden or whatever country such that you have to reduce the risk for the private sector, over what time horizon do you expect that to become fully sustainable? Or do you expect to have to be there forever? And the second question is, what are the implications of delegating decisions on where to invest to private sector, NGO, etc., companies, however well-intentioned, and how much of the public sector's responsibilities should be delegated in this way?
Delegating decisions on where to invest. Do you mean geographically or
no.
how?
In what projects, in what investments?
Yeah.
It's one thing for DFID to give money specifically to a project in Nigeria. It's another for OPIC to give money to someone to give money to, etc.
Yeah, based on their investment strategy or their development grid. Or so I think, yeah. Grand, thank you. And thirdly, lady in red.
Hi, good morning. My name is June, and I have a charity in Gambia, West Africa. So my question is for you, Ladebe. You talk about when they have done their markets, they've grown their crops, and you put it into storage for them, and you've already found the market. What happens if the prices change? Do you know what I mean? I saw the Nestle and things like that. So I'm looking at it, you've delivered what you're supposed to deliver, which is the crop, and then you put it in storage. If the market changes, does the farmer still get the price?
Okay, thank you.
That question, but well done. I will be speaking to you later.
Which I think relates to a broader issue of it's unknown, it's uncertain. This is not, here's $100 to buy so many malaria nets. You don't quite know. Let's, Luke, we'll come to you first on Sheila's very specific one. Could you also touch on this sort of inequality, who benefits? I think it'd be really interesting to hear the IFC's perspective on that. And then we'll move to the other panellists.
Sure. So I think the question was on the time horizon, right? And I think that you need to look at that with the development of the market, right? So I think this is, you'll have particular horizons when you're making a particular investment, and we tend to be long players in those markets, so it tends to be 10, 15 years. But I think the real question was around the market. How long is this going to need to go? And I think you really need to look at what is happening within the market. And this is a dynamic thing, as we've seen over the last couple of years. So economies where we could have said, oh, we don't need to do much there anymore, a few years ago, that's not the case today, right? They don't have access to markets. Banks are pulling out. There is no long-term money. So it's very, very difficult for investors to actually make their investments. That's part of where we come in. It's part of our counter-cyclical strategy. So it really depends on the market. But it is something that we are all constantly assessing, right? So we talk about not doing, I think somebody else had mentioned it, not doing the plain vanilla, right? So if somebody else can do it, let them do it. We're constantly trying to take the more difficult situation, trying to push, because that's our mandate, right? We're trying to open those doors, do a bond where no one's done it before, access, set up a structure that people can repeat. That's a lot of what we do. So I think it very much depends. It depends on the market, is the short answer. On the who, This is a key question we're always asking. We internally within IFC, we have targets around what we're trying to do by the level of the economy. So in the IDA markets, which is a World Bank term for the poorest, percentage of our investments that go into conflict-affected countries. We're also constantly tracking how much we're doing on gender. And one of the World Bank goals is to be working with the lower 40% of the population in terms of income. Now, saying that is very easy. Measuring that is much more difficult. As I said earlier, you can, if you take the logic too far, right, we're only going to work directly with the poor, then you would never provide infrastructure. Infrastructure is one of the things that most helps the poor, by the way. So you need to think about these things a bit more holistically. So we work at multiple levels of the market. And what we've seen repeatedly is that actually markets, I don't think this is surprising when you think about it for a moment, markets tend to move down the market over time. So the question is, how do you accelerate that flow? So if you think about people that have access to a mortgage, in most developing countries, that's only the very wealthy. What we're constantly trying to do is take that down another notch. So helping banks to take the next level of risk. How can we help them understand the market, deal with the risks, and do that in a profitable manner, which then allows us to do more. Which is why, I mean, I think it's very, very important, because sometimes in this discussion, people get confused. We are not saying that there's no role for the public sector. The public sector clearly has a role. And when you're talking about the very, 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 very poor, working through business is not going to get to the absolute poorest in society, typically, because they don't have much income. If they don't have much income, they can't buy much. Okay, that's the sort of the basis here. So there are roles, right? We shouldn't confuse the two. It's not that the private sector is going to take over the role of government, but we are constantly looking at this. And one of the things that we're increasingly doing is helping bring tools to our clients. So, for example, there is a tool that we help support Grameen to develop, which helps measure where are the farmers that you're working with. Are they actually the poor? When you're helping the people who come to get health services, are they actually the poor? So there are ways that we can rapidly actually measure what the people that we're working with, where are they on the socioeconomic scale. We've done this with Grameen. We're developing another one with the World Bank that's even better, that allows us to look at poverty within a country. Right, so different regions, etc. So there are tools, but they take time. And to get to this point that a couple of people have brought up, there are real costs when you ask people to do this, right? Which is why we try to do this on a sample basis, which is why we try to support it directly. So this is not something that you should be asking everyone to do. It is something that you want to target on a sample basis to learn.
Luke, do you mind if I push you a bit on this?
Sure.
Kind of a pet topic of mine. I assume the tool you're talking about is the Progress Out of Poverty Index, the PPI, which can now be rolled out very cheaply. Acumen and Lean Data Initiative are doing so very well. In IFC, even the bit of IFC that talks about inclusive business, business that engages the base of the pyramid, they define the base of the pyramid as either 850 or 10, depending on kind of what you read, per person per day, purchasing power parity, and the PPP thing is important. At $10 a day, PPP is really different to the poverty line, whether you're saying 125 or 190 or 2 or 250, depending on where you were standing last year. There's a huge gap there, and that's the inclusive business bit of IFC. I feel there's a lack of clarity when people are talking about who is reached. And I've got here the harmonised indicators from the DFIs that we were talking about.
Right.
It doesn't have on it who is reached. So in terms of IFC, how often do you actually say we must look at who is reached? Do you think that agenda is changing? Do you think it's coming in? Do you think there's any hope of it hitting this harmonisation?
Again, I think it is very difficult to understand who is reached on a broad basis, right? So we actually led the HIPSO effort, and this is just trying to get people to measure the same thing when they talk about it. To then measure who it affects is going to vary tremendously in different countries, different circumstances. So I honestly, I don't think it's reasonable to think that you can have that as a standard indicator. right? The costs to measuring this are very large, and doing it ex ante are even harder, right? So what we are trying to do is to come up with a series of evaluations that help us understand what this looks like in different stylized kinds of economies. If you can do that, then you could say, look, there's a reasonable chance that this will affect these amount of people and what level of them may be poor in this kind of economy. But, you know, we're working in 160 economies. It's, you know, there's a lot of diversity out there.
Okay, great. Really interesting. Alice, I'm going to ask you to comment on that in a second. But first, we'll come back to Laddie because we had a very specific question about the risk of pricing. Perhaps you can comment on that and also other risks that might make things go very badly or very well. And also maybe because you're working with farmers, you do know something about how poor they are and who is reached, and you could shed light on that. And then we'll have Avina and Alice on this general issue about both the strategy and who is reached.
Okay, so on the subject of pricing, so we typically see that prices are lowest at harvest because there's a glut, and because commodity markets aren't as developed, say here, so everyone brings their produce to the market, and that's when prices are lowest. So as of yet, we've not seen a situation where prices fall below the point of harvest during other parts of the year. However, we are insured against that. So we've taken price insurance risks such that if the price of the crop, we know typically the periods when we sell the crop. And the insurance basically says that if at those periods the price falls below a certain price, which is probably linked to the price of harvest, then we get some kind of insurance payout as well. So that's what we do with the price. Well, as of yet, we've not seen that happen yet. Well, who knows?
So you've insured against the risk?
Yes.
Yeah. So what's the biggest threat to your model? Where do you expect?
So the biggest threat
risk?
probably is credit, because it's credit-based. Repayment rates falling. So we have what we call 8 levels of risk mitigation, which I can't really go into now, but can discuss later. And one of the crucial things, and this is why we were so grateful for the support of our donors, is that we're working with poor farmers, and it's credit-based. So we have to communicate to them that it's not a development project, because if they were to know it was a development project, they have no incentive to pay it back because it's essentially free money. So we have to tell them this is not a development project. And our supporters have been very helpful because they don't go around branding every single thing with their names. They have a very light touch. So that's been very helpful for us to maintain a high repayment rates.
That's really interesting. That relates to what you were saying about you speak different languages to different people. Thank you. Oh, and sorry, do you know how poor they are, your farmers? Do you know anything about their income?
So I won't be able to give you the exact figures for income, but we do know that because it's smallholder farmers, we typically work at sub 5 hectares. So if a farmer has 0.1 hectares, then we have finance people with 0.1 hectares, which 10 by 10 square meters. Or meters squared, and with people like that, if something goes wrong, or before us, if something should go wrong, then the reality is them and the members of their family won't eat, you know, so they may be limited to half a meal a day. So that's a proxy of poverty, the poverty level that we're dealing with in those environments.
So it's probably fair to assume that a good chunk are under the $1.25, $1.90 poverty line, and the majority are under the $2 or $2.50 line.
Yes.
Yeah, before they came. Okay, great. Vivina, could you comment on the question of how does it work for the donor to delegate investment strategy basically to you? Do you know anything about who is reached? And also we have an online question from Fairtrade about mechanisms for screening, due diligence and human rights issues. And could you just comment on whether you cover those?
Ooh.
And we don't have very long left because we're in coffee break.
So can DFIs or development or governments delegate? I'm not very objective here.
You're not supposed to be, don't worry.
The answer is of course. However, let me just say that it really depends because it's a new field. The private sector has not been doing it for very much. There isn't very many people who do what Sarona does. We're actually in a pretty unique space. And so, and this is true for any business. When you delegate, you have to make sure that you have the right people to delegate it to. So, yes, it can be delegated, but I think there is a need for the industry to mature just a little bit more to make sure that the conditions are right. The second question was, who do we calculate, who do we reach? Well, in our annual values, Sarona values report, one of the IRIS metrics is gender. We, on purpose, do not target bottom of the pyramid. That is part of our strategy. And that is actually, I would encourage all of us who are active in this, what's the word I'm looking for, intersection of objectives and intention and measurability. We have to be extra clear about where we're operating and what we're trying to do and why and how. Because it is part of the confusion of the language is when, you know, you have an impact investor and tells you, you know, I'm an impact investor, I want you to go and reach the bottom of the pyramid by selling things that are completely subsidized. And they say that to Sarona. Sarona has to go to the pension fund and say, look, give your money to us because we're going to give you, you know, X% return. It's just not going to work. So we try to reach and measure impact, gender, yes, job creation, yes, quality of jobs. We haven't spoken about, we've spoken about number, but quality, important. So we try to do that. And then the third one, which was human rights, and how do we do due diligence? Well, so yeah, it's part of it, but that it goes to the much bigger and difficult, complex question, which we try and do, which is when you do due diligence, especially because you're not, neither part of IC nor Sarona are buying directly in the company. We're actually doing due diligence on managers who are then investing in companies. So how do you do due diligence ex ante and then monitor that what you gave them the money for is actually going to be deployed in the way that it needs to be deployed? And yes, human rights is definitely part of our due diligence question set. But again, I don't know many other private sector players who have integrated financial due diligence and ethical, social, environmental values due diligence from screening through due diligence, through on-site, through negotiations, through deployment, monitoring, and then all the rest of it. So it's, yes, we do it, but whether we do it as well as it can be done, should be done, it's a topic for another day.
Thank you very much. Alice, I'm going to give you the last couple of minutes on how you see this delegation of investment strategy, how you see the question of who is reached, and this cascading of due diligence and the challenges of that.
Okay, thanks. A couple of minutes for that. Pleasure. Not a problem, not a problem.
Middle East speech while you're at it.
That's quite.
Well, I think the first point I want to make is that the investors like AgDevco and the Diffid Impact Programme are trying to work out, they have a systemic impact around how do they change the whole economy they're working in through encouraging more private sector investment. And they have another one, which is about understanding the direct impact on beneficiaries. Those two things, they need to report and understand on both of those things. But I think one of the points that was made, particularly by Vivina, was around blending people who want one of those things with people who want one of the other things. You know, looking at who wants to change the system, bring pension funds in to create more money for this whole environment, and the people who need that understanding of the detailed beneficiaries, is very difficult to put those two together. And we have to be incredibly careful how we marry those two objectives and who we're reporting to, who we're doing this for. Because I think the moment we try to blend those two, and blended finance is fraught with difficulty in terms of doing that. That's the first point, I think. So and it comes back to to Paddy's blog as well. If we are subsidising, we don't want to be. The point is not to subsidise the private sector to come into something they might otherwise have done. Clearly. But nor do we want to not use public sector money to draw people in. And I think that all of that needs incredibly careful splitting up. So, for example, with AgDevCo and the Impact Programme, we are trying to understand who the detailed beneficiaries are, coming back to your point. So very much going back to what Laddie was saying, trying to understand the income uplift, trying to understand who, in terms of the women that we're engaging with, we are reaching. But the trouble is that is very costly, and it's very difficult to get to that very detailed data with a sort of standard private sector fund approach. So how can we use that, the money that's perhaps coming in from the public sector, to understand those impacts better, and then be able to gauge, so in which investments is public sector best used? This is where we're not using our knowledge well enough at the moment. So we have the systemic impact, and this brings in your point, Sheila, about if investment strategies are designed to create impact on the poor, then we have to have either a very clear understanding of why that investment strategy will create that impact on the poor, and then we can leave it to those investors. Or we have to, and perhaps it's a blend of both, we have to measure exactly how it is working for the poor and then build that back into how we learn lessons, into how the investment strategy is moved, is changed to reflect those learnings from the impact. And I think all of that needs improving in this space. I think we would all agree that's both separating out where the blended finance is best blended and making sure the impact is measured on beneficiaries, making sure the investment strategy is properly designed to create that impact, are all things which are being teased out in the examples of a lot of the clients that I'm working with. And I think that's where the really interesting work will continue to be done. Does that work?
Thank you. And you've certainly come back to one of your first challenges, which is about we're not learning enough.
We're not learning enough.
And we don't have an answer to Paddy's blog, quite clearly from this panel. I can't ask you to vote. If you had 50 million each, where would you put it? Because we don't have that kind of easy sums. But we certainly have Alice's challenge to learn a lot more and use that learning. We are 7, 8, 9 minutes late for our coffee break. My apologies. Please go and grab a quick coffee. We're 4 minutes late for our coffee break. Fine, I can relax.
I probably took 6 minutes to explain.
We will start promptly at 10 past, which means at 8 or 9 minutes past we'll start chivvying you, but we really will start at 10 past because we don't want to lose time off our wonderful second panel. Please go and enjoy your coffee. Thank you.